Well,
Hello, Raymond.
hi, John. Uh, Thank you for taking the time to sit down and chat again.
I
You
think I'm
know,
the one that pushed you to do it a little bit sooner than later. So
yeah,
thank
you
you.
you definitely planted the idea in my mind, and I was like, okay, let's do it because we were talking about people thinking of this whole life product tool um, as an expense, right? And if you think about what are the kinds of things that we think about that are expenses, our mortgage, our car payment, these are expenses. We also consider them necessities, I guess, maybe on some level. You don't have to buy a house, but you probably in our society should have a car if if you're mobile at all, going to get groceries or whatever. Um, but so there's a whole bunch of things, lights, like, for electricity, water, these are all expenses in our lives. And some people, yeah, do think that, well, I'm paying for homeowners insurance, car insurance, airline trip insurance. I'm paying insurance all over the place, and they're all expenses. So it's easy to see how somebody would think of this as an expense. But I would like to say, do we think of our savings as an expense? Do we think of our IRA or our 401ks as expenses? Well, if you're doing those things, putting money in an IRA or 401k or a savings account or CDs, you probably don't think of them as expenses. They're things that you want to do, that you've decided to do. So you don't necessarily think of them expenses. Um, and I would venture to say that you're saving in a bank down the road, a commercial brick and mortar bank, or maybe it's all electronic. You're putting your money somewhere if you have money beyond your expenses, somewhere. And I would venture to say that it's not maybe quite as easy because, you can just drive down to the bank down the street and take money out of an ATM or whatever and get cash like right away. But really, if you're talking about bigger items, um, a $500 expense or $1,000 or 10,000 or 100,000 or whatever it might be, you just get in contact with the insurance company via email, or phone call or however you do it, and request uh, the money be sent into your bank account so that you can utilize it. So it's that
Yeah.
little lag time.
Yeah, the one more is go online and ask for it. I ask for loans online. I don't call them and ask for it.
Right.
So it's
Yep.
another option.
Yeah. Yeah. You don't even, yeah, yeah. So, um, anyway, so that's enough from me. Uh,
Yeah.
what are your thoughts about all this?
Well, yeah, it is about this idea that what you said was it's something you want to do, right? So at first glance, maybe a permanent whole life dividend paying whole life insurance policy. Um, I guess you're thinking, yeah, I want to do it, but what good is it for me? And well, I do understand I get to borrow against it if I want, right? I can pay it back. I'm never touching my money, so my money's compounding. So you see some benefit, but then let's use an example of say $10,000 and the first year's annual premium is 10,000 and I only have access to six to borrow six of it that first year. Now you could borrow it multiple times. So it's not just the one time, but let's just say you're saying, well, okay, yeah, it is an expense because I just lost control of that other 4,000, right? And so these are some of the words that we want to focus on, I want to focus on today is things like access and control, right? And right, I'm skipping and projecting really on somebody saying, because I've talked to people and they go, oh, I only get to use 6 out of 10. And we talk in various ways to say yes, because there is, a cost to the life insurance portion and there's cost to the operations of your bank, which is the operations of the insurance company, all the people that are making this happen
Yeah.
behind the scenes. So they're almost like your hired help, as Nelson talks about in the book, all the operational people. And then of course, yes, you're paying for me, the advisor or the coach or the practitioner. Um,
It's all
but
startup costs of any kind of business that you would ever start. You'd always have startup costs, and you might not be profitable that first year. So when you said you can use the 6,000 multiple times, I just want to clarify that the reason you can use it multiple times is because you're paying it back.
yes,
You're putting
yes,
you're putting it back, back
yeah.
into the general fund of the insurance company is what you're really doing.
Well, and you're freeing up your collateral again,
Yeah. Right.
your 6,000 in collateral that you're utilizing is, your cash value. So yeah,
Yeah.
so you could use it multiple times if there was something you wanted to do with it and you paid it back. So yeah, there's more than six potentially, maybe you're going off and buying, I don't know, some antique piece of furniture and you know how to buy and sell that. I don't know, you buy it for 5,000, you sell it for 10, you put the 5,000 back in, and you find another piece, maybe 2 or 3 months later, you do the same thing, right? So technically you'd almost have more than what you ever put in the use of it
Yeah.
multiple times.
Yeah.
So people don't really even think about that because this is so foreign. I mean, the whole thing is foreign. And I got up relatively early today and I felt good because I went to bed early and sat down to take some supplements and stuff. And then I've got books all over the place. So I picked up The Control Option by Mark Benson. And he must repeat this little quote uh, maybe 3 or 4 times in the book. He says, remember, opportunity finds people who have access to their wealth, and debt finds people who do not have access to their wealth. And he's using this word access, but the name of the book is The Control Option. And he talks about keeping control over the money. So it's not just having access. Do you have control? Of course, access is very closely related. Um, but I've been in a situation in my life where I had tons of equity in my house. And because I was in between jobs and I wasn't really in between, I just wasn't making the money yet in the new job. And that was before I started doing this. Um, all that money was trapped in my house, as he calls it, was in the walls of my house.
Yeah.
So I lost control of that money, meaning even though I supposedly had this equity, whether it be equity partly from me paying down a principal on my mortgage. So I built equity that way, and then the market didn't take it and also kept growing. So the value of my home was higher, but literally the bank still had control over whether I could use my equity, my wealth, right? Supposedly I had this wealth. Let's say my house was worth, 600,000 or 700,000, and I had $100,000 mortgage. It's 500,000 or 600,000 that was tied up in there because I couldn't leverage it,
Yeah.
right?
Right.
So I think of it as, when people think that they're going to have their money uh, invested in whatever, I talk to a lot of people that say, I'm thinking about getting a 2 family or a 3 family, and I'm going to live in one of the apartments and rent the stuff out, right? It's something they've decided they want to do, right? Because of the financial benefits of it. Sounds like I'm going to live for free, and I'm going to build this equity, right? And I'm going to end up having this piece of property, I hope, that's free and clear. But even so, what money is in the walls, quote unquote, in the walls of that house is potentially not accessible. It's because it's out of your control. And you want to use, and I'll let you talk in a second, Ray, but I started coming up with these ideas of control, and I took the word slave, and I'm not going to go crazy with the word slave, but I said, well, what's slave mean? Well, it's other owned property. Somebody else owns the property, you know? So think of it as, being owned by somebody, right? Somebody else owns you. And what's freedom? Well, that's self-owned property, right? So as a slave, you've got lack of control, right? Tremendous, potentially, but tremendous lack of control over your life. And when you have freedom, you have an abundance of control, right? Hopefully it's complete freedom. And that to me is what we're really talking about when people think of this as an expense. They haven't looked at it as a piece of property that they're buying a business basically when they set up a whole life insurance policy with the idea of the infinite banking concept, but it's immediately has value. Just like immediately when you put your 20% down on a house, right? You believe that I know I borrowed the other 80%. So they're saying somebody appraised it and says it's worth, whatever it is, 500,000, let's say. Same thing when you put your money down on a policy. It's immediately has property value. It's an asset to you. And that's an asset that isn't ever going to be at the whims of the market. It's not going to be at the whims of whether we're in a good economy or a bad economy or kind of stagflation where things really aren't moving. And you're paying down the mortgage because you have to pay down your house mortgage, right? Because they've told you you got to pay X amount every month or else.
You've agreed to the terms.
Yeah, you've agreed to the terms, but it's not just whether the real estate value goes down in a bad market. What is going on with your personal economy at that time? Does that mean that you're struggling to make ends meet? Does that mean you've lost a job, right? And you've literally lost control of that. And compare that to a policy. As we've talked about, there's so much flexibility on how you can continue to fund this policy. The policy may be at a point where it can completely fund itself. And that doesn't take very long, honestly. The way you and I structure these policies, that only takes like 3-4 years. And all of a sudden, this policy is able to kick out enough growth that it can make the payments. And so you can weather the storm. If you're in a storm when you're required to pay on your house and everything and all the people and the things that are inside that house are in jeopardy potentially because you can't seem to make ends meet. And now you're going to lose that piece of property. So to me, it's one of the best pieces of property to own. And you are that piece of property. In essence, you are, because you are backing it. Your life, that's what they're insuring, right? And so to me, it's if you think that this is an expense, then you really you're really missing the point of what this really truly is. It's not just a life insurance policy. It is this banking system that you have started, and you couldn't start any business without some level of cost to you from the outset. But this one is, if you do your parts and pay your premiums every year, is nothing, it's going to do nothing but get better for you. And that's not a cost. Um, like so many other things are, like you listed, which, hey, once you pay for your car insurance, well, hopefully you never in a car accident. And so that was just a sheer expense of doing life business or business. You
Yeah.
need it. So
Yeah. Yeah. Um, yeah, I can, when you were talking about the locking your money up inside the walls, I immediately started thinking about reverse mortgages. Um, because it's like, I don't know, for the baby boomer retirement group that's going through the system right now, has been, entering that for the last, I don't know, 10 years, has it been? Um, they've got, I think it's on a national level, they've got like $4 trillion locked up inside their house. Um, and reverse mortgage is a way to access it without taking out a home equity line of credit, which you lose control of that because you, in the sense that you sign up for terms that are dictated by the bank instead of yourself uh,
yep.
taking it through your policy. The thing I want to go back to is that first year. You use the example of 10,000 going in and 6,000 showing up as your cash value available uh, for loans, and that's just the first year. And you kind of touched on it, but that's the first year. The next year you make your next premium payment. It shows up as 8, and the next year it's 9, and then the next year it's 10.5, and so by year 4 it's starting to, the money you're putting in is showing up completely. um, and I think the point you wanted to make was that down the road, all the money that you've put in, say you've put in at 10,000 for 10 years, you put in 100,000, but the cash value is at like 120 or 110 or whatever it might be. And and then at that point, it's just growing automatically. So it's becoming more and more efficient over time. And there's hardly anything that I know of that actually gets better, and it can't help it but get better. It just gets better without you really doing anything other than what you've been doing. And you're going to go ahead and, if you're a saver, because if you're not a saver, well, that's, if you don't have the ability to save, I can totally understand that. But if at the end of the month you have money left over, that could be, you could dedicate that as your savings. Now, granted, the whole thing about paying yourself first is also a great thing to talk about, but not necessarily here. But you have money left over, so you're going to put it in the bank. You might just put it in a regular savings account, or you might leave it in your checking account. But it's somewhere, it's sitting somewhere, and this is a great place to be putting it, because when you do go to use it, you're not, as you've pointed out before too, is that you're collateralizing it against your death benefit, and you're taking it from the general fund of the insurance company. And yes, they're charging you interest, but you're using it. And you use the example also of buying something for what was it, 5,000, and you sell it for 10, and that extra money you can put it back. You put the money back in the policy, and if there's room, if it was designed to have additional room, you could possibly put all that profit in. But if you didn't have the room, that would be an opportunity. Either maybe you put that aside in a CD for a little while until that builds up, multiple times of flipping that, whatever the product that was. And then eventually you get to the point where you say, okay, it's time to start another policy, which is another branch of your family bank, over and over. But you're saving money somewhere. And do you save it with the idea that that's an expense? Probably not. Probably not, because you think of it, well, I have access to it. I can just go get it. It's not an expense. I'm just putting it over there until I want it or need it or whatever. That and you're doing the same thing if you put it inside the policy, except you have to think of it as, I'm doing this to start my own bank, my own bank. And the policy is not a bank. It's the thinking that you have around it that's the bank. It's up here that's the bank. That policy, the insurance company is not a bank. It I don't want to be saying that kind of thing, but if you want to be your own bank, it's everything starts up here, right? I mean, everything in life starts up here.
Ray is pointing at his fingers for people that listen, pointing his finger at his brain. And for those listening on the audio.
Yeah, for those that are not watching, just listening to a podcast or something, that, yeah, I'm pointing to my forehead here. It's everything starts up here. So it's the way you think about it. And if you have the opportunity sometime, once you get to understand this, I'm going to say that a person would, an agent would say then, okay, well then how would you like to start this? And they could make a recommendation, or, the agent could make a recommendation, but I would rather see you, the client, okay, now if I get this, the more I put in, the bigger my bank. And that would be true. So you tell me what you want to do. And that's basically what my clients end up doing, is telling me what they would be comfortable starting. Because again, they can start multiple policies. They might start another one next year or next month. But anyway, so what do you say to people? You said that people say this to you, that it's an expense. What do you say to them, aside from what you've already said? Is there anything else that you say to them that helps them get over that mental hurdle?
Yeah, I mean, it's most of what we've said. I do give them kind of the lay of the land, that this is where some of the money is going that you don't have access to that first year, for example, because the first year is the worst year. It gets better. There's less and less that you don't have access to, as you shared. But remind them of what you just mentioned, which is that they're creating this entity. They're creating this new business, which is a banking system. That's a better way for me personally to speak about it, but doesn't mean that people understand necessarily what that means, right? Because they still got to use a commercial bank. It's really the financing in your life, right? It's a tool to finance everything. And keep control over the flow of the money, right? You're letting the money flow through your system first, and then you may utilize that money, but you're always utilizing somebody else's, because you're leveraging yours. You're just using yours as collateral, so yours just grows compounded. But really letting them know, this is like starting your second business. If they're already a business owner, this is going to be the financing vehicle for your business. And that not only will it serve you throughout your working years, but it will serve you as tax exempt income in passive income days, whether it be called passive income days or retirement. That, to me, is another point. I don't always remember to say to people, but depending on their age, you'd say if you had access to every single dollar that's flowed through your hands thus far in your working life, how much money do you think you'd have? Man, that's a painful one for me, and it's painful for most people that have to contemplate that for even a moment.
Yeah. And
That money,
excuse me, that's why people say so many times too, after they've read, whether it's Mark Benson's book or BYOB or Busting the Life Insurance Lies and all, all those kinds of, any of these books that have been written about this, they say, why didn't I find out about this sooner?
Yeah, yeah,
Uh,
yeah.
God, it
I
would have
just
just
didn't.
changed. It would have changed my life. That 1.5 million that's already filtered through my hands, there, it's gone. But
Yeah,
I say, well, it's something that you know now. So start now, start where you are, and it isn't just for you, because the whole thing about captivating your money in your own banking system is that you pass this on to your family and the next generation and the next generation, and creating perpetual wealth. When you plant a tree, it isn't necessarily just for you. It's it's for the next generations, and all that. So
yeah.
sorry to interrupt. I just
Well, no, I mean,
um, Nelson Nash, the author of Becoming Your Own Banker and the Infinite Banking Concept, he talked about all the policies that he had on his family, and we've talked about it on this show before, and um, to be passing all this money through this system and then generationally sharing it and perpetuating it, uh, it's really stepping away from the tax man in a lot of ways, right? Doesn't mean you're going to avoid income taxes and all the other taxes, but the access to cash that's tax free to be utilized with no questions asked. I think he said it took him 13 years to get out from under the banks, and never going to look back, never going to have to go to a bank. Grandchildren will never see the inside of a bank and all that kind of stuff. And additionally, this morning, I was looking at this control option from Mark Benson. Again, give him kudos for a nice job writing a small book. And the subtitle is called The Homeowner's Edition. And you use the example of sitting with a couple. He was a teacher at one time, a high school teacher, I believe.
yeah.
And before he became a life insurance agent and started practicing this, um, he took two teachers, husband and wife, and before they even got access to the money to utilize with their lifestyle and so forth, they had already given up 34% between, income, uh, federal, state income taxes, and Medicare. 34% of that gross money was gone. And then he said, well, and then I've got this mortgage over here, and this car payment, this truck payment, and another 41% was gone, right? Under the bank's control, right? And you're feeding that banking system. That's, when we think about banks, think about those as they're a banking system. And that's what we're feeding with this other 41% of our take home pay. It was the example. Let's just say it was $10,000 and, you know, ended up being 6,600, after 34% in taxes and Medicare. And then of that 6,600, 41% was going to the banks through the mortgage payment, the car and the truck payment. And he eventually gets to the point where he says, well, one of the last great deductions is home mortgage interest insurance. You still can deduct that from your taxes or itemize that if you're itemizing, right? And he would have people just start paying their mortgage once the premium, I mean, the dividend payouts get big enough. You just take that dividend payment, instead have that go into a separate account that automatically pays your mortgage every month, right? And you put the money into your policy first because you keep control of that money, and that money never loses, well, it never diminishes in nominal value, numbers wise, right? It might lose in purchasing power, but it keeps growing, right? Because you just keep adding that. So rather than pay your mortgage, maybe even your car and your truck payment eventually, if you think about funding these policies and not being afraid to capitalize them, which means your premium, your annual premium payment, make it as much as you possibly can make it, because eventually it's going to produce income, just like this 2-family or 3-family I started talking about. It actually produces income. And that way I still get the tax deduction on my house, right? Because I'm still paying, I'm still paying the mortgage, right? I'm still paying interest. And but I'm always putting the money through my system first. And then this system is paying my bills. And I think he said recently, he said he's got like 60 people so far, which doesn't sound like a lot, but to you and I, it does, because it's not that easy for someone to get 100% of their cash flow, meaning, say, take home pay, for example. 100% of that money is going through their policies.
Yeah, he calls them the 100%ers or something like that.
Yeah, the 100%ers. And then he has the policy, which is creating basically an income, have that pay, right? But you keep adding to your capital pool. Your capital pool gets only larger, right? It only gets larger. And when you think in terms of not just one policy, you're going to have a system of policies. You're going to have a banking system, right? And it's not just you, it's your 2 children, your 3 children, whatever it is, right? And this may, you'll be around and your grandchildren will be doing it, because they're keeping the flow under their control and guaranteed access to the money, right? Not leaving that up to the commercial banking system, who will do whatever they want when they need to or feel their need to, which is not give loans. Hey, you don't qualify. I don't care if you have 500,000 of equity in your house. You don't qualify. You can't get it. You don't have a job. You can't show the income. That happens to people.
Yeah. Yeah. Why do they
So,
give you loans? Because you have the ability to pay them back.
because you already have the money.
Yeah, and income and all that stuff. Yeah.
Yeah, 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 and credit scores and all that. Well, and none of that's required with the infinite banking concept. You don't have to have a job. You don't have to prove anything. Your value as a human, as a man or a woman, I should say, that is what this is all based on. So we're building it off of something that is yours. That's you, right? And you have control over you, right? You can take good care of you or not such great care of you, right? How long are you going to be around? How well are you going to be able to perform, right? Am I eating well, sleeping well? All those things. You are the piece of property that this whole thing is based on. And we should give it some serious value because that is everything.
Yeah, right. Because without you,
Absolutely
nothing
everything.
happens. Whether you have life insurance or not.
Yeah, it's everything. We
Nothing.
are the energy of the world, right?
Yeah, yeah.
We drive it. So
Yeah, so this is a good topic to the thing about expense. Thinking of this as an expense. Yeah, it's easy to think of it as an expense when you put in 10 and it only shows up as 6. But if you're patient, you know, you can see that you get all that comes back to you. And more and way more. So
Right.
I think this was a great topic that we have covered. Is there anything else you want to say about it? I mean, I think I've said everything I want to say, and since that
Yeah.
it's not really an expense because you're not losing it. It's not going away if you just keep it going. If you keep paying your premiums, it's not an expense. Nor is your savings account at the local bank.
Yeah. It's just it's
more shifting our perception of what this really is, right? It's not unlike the analogy I use with this perspective you would have if you were buying a two family, right? You are kind of thinking long term, right? You are thinking, hey, it's going to grow over time. It's a good place to put it, and I got all these other benefits. Um, but it's comparing the benefits. They're very, very similar, but to me, the big difference, and I'm not saying don't invest in real estate and don't buy a 2 or 3 family or 4 family, whatever it is. Whether you live there or not, that could be a great investment. But I look at it as the control that you have.
Yeah.
You have the control over this policy. You have control over your banking system and your piece of property. And you have a lot of options that you're not going to lose anything. If anything, all you're going to do is gain.
Yeah.
And that's
Just
the
like a
big
bank.
difference. Just like the bank. And it reminds me, I'm just going to paraphrase it. I've talked about it before. It's one of my favorite lines in becoming your own banker is, when you walk up to the teller, if anybody ever, or drive up to the teller and say, geez, I need to write a check for cash. I want to take some money out. How big a check can I write? Well, the same answer would be that we would give you, which is how much money have you put in? And don't be afraid to say, this is valuable to me. This is not a cost. This is a profit center for me. Because when I have access to leverage that cash value and use it as collateral and do whatever I do, I can make a lot of things happen when I have access to cash. But if I don't have access to cash, I'm either going to get in debt or I'm going to miss the opportunity. And I guess that's a wrap for me.
All right. All right. Well, then it's a wrap. Thank you for listening, and we'll catch you all next time. Please do subscribe, ding the bell, share it, and all that, and comments. We'd love to hear from you. It's always
Yeah.